Now, this is part two of yesterday's video on the DAX. Now, I'm in a swing trade on the DAX. I'm actually exiting this trade in bits and pieces as it goes up here. Now, I'm looking for a big move, but I'm not looking for a big move that's coming up in the German DAX to the long side. I'm actually on the alert for a big short trade on the German DAX. But before we actually get into that, I want to talk to you about today's day trading because it's been a complete chop fest, and I want to talk to you about how to identify when the markets are sideways so you don't lose your money and you don't trade in that type of environment. Okay, now yesterday was great because we got this very nice, this is the 1 hour of the DAX, got this nice pullback into here, and then we got this nice push higher on the German DAX, this continuation. Now, I spoke to you about watching for that 76.4% fib area, but I want to just, before I get into that, I want to talk to you about how to identify when the markets are sideways. And there's an easy way. All you have to do is look for triangles. So find a trend line. Okay, you need 2 reference points to have a trend line. And then find another trend line coming underneath. You've got 2 reference points here. And you can see there's a triangle formation. Triangle formations are great to trade. They give you 2 things. They tell you, number one, that it's a really choppy trading environment, and number 2, there's a breakout coming and it could be really big. So when you're looking for choppy sideways markets, if you're getting stopped out of a couple of trades, check to see whether you're in a triangle formation. Doesn't matter what time frame you're using for that triangle, but check it out because you could be in a slow trade environment and the market is getting ready for a big move. Now, part 2, here we go, about yesterday's trades on, or the pattern I was talking about on the German DAX. Remember, yesterday we were around sort of this area here, nice hammer at the lows here, nice push up. Okay, so we got nice pro trend system green and tracks green. Now, I said that we got to make sure we don't go above this high. We need to mark off our fibs. Remember how we drew those fibs? We take it from the high to the low, and we looked around this 61.8 and 76.4. That's the hot zone. I need to close through there and continue going to really want to stay long in this trade. But as we sit, as I'm doing this update for you, we're sort of stuck a little bit around this area. So what that means is we could make a lower high. So let's go and get the drawing tool once again. We make a high here. We come down, deep sell off, then here, draw your fib. Now, if we start to roll over on the 4 hour time frame and turn red pro trend system, red tracks, I will short that. And I'll get out of my long trade in the German DAX swing. Okay, so it's been a nice trade. I've been getting out of it as it progressed higher, and the position side was quite nice for a spread bet, and you know, it's made a significant amount. This is the last bits of this swing trade, so it's been a lovely trade. Now, if you look at it on the daily chart here, guys, on the German DAX, it's been green and long and strong for a very, very long time, and the last buy signal was on the 15th of February, and it stayed green here. But structurally, we got a massive divergence on the storyteller, and on that 4 hour, with the combination of the CPI number out of the US and the structure on a chart here, what makes a lower high? Well, of course, a lower high is it needs a high reference, and then it needs a lower high. But why we're here and we don't have any red to get short, because it's all about timing, isn't it? Then there's nothing else to do. This is sort of like yesterday's video was step 1. This is step 2. We've gone up, and now we're looking for that signal for step 3. Okay, so I'm getting ready to exit that swing trade long if we get the red on the pro trend system, because the next move down could be quite significant, back down to these support areas, as I said. All right, so I'm watching, I'm on the lookout for this market to give me the structure, and we'll do a video on market structure, starts of big moves, how to spot those big trades that are taking off, just like the euro did recently, just like Bitcoin has. I'm going to teach you how to spot those big trades. Now, it's not what you probably think, but I'll do that on another video so I can go through it in more detail for you. But really, getting those sideways trending or non-trending markets using triangles can really help you that the market is going sideways. And you know, you just got to keep your eye out for the next big move, because when you've got a triangle formation, there is a big move coming, and you just need to keep your eye out. A lot of chart packages will draw these triangles for you, or the trend lines. You just need 2 or 3 reference points, guys, all right? And just watch out for those. The other thing why, you know, we weren't really pushing higher, we didn't have this yesterday, today. We've sort of had green and red, and nothing really on my momentum indicator, no major new signals. We'd also gone up quite a long way here, so that short on the 1 hour in combination with the 5 minute was perfectly fine to do this morning, but really we're sort of stuck. So we need the breakout. It is coming, do not worry. I think, what is it, Tuesday, Wednesday this week, I think we've got some really nice moves coming. And why also do I think we've got some bigger moves coming? Let me explain this other thing to you, because I think this is priceless, especially if you're trading in funded accounts, and especially if you're trading in the indices. Now, you need to keep your eye on the VIX, okay, the volatility index. Now, the volatility index tells me as a trader when I should really be going in hard with day trades. And the VIX is a volatility index, okay? And VIX, you can get it in your spread betting accounts if you're in the UK. Should have a code here, VIX, where you can actually locate that. And it's not it is a tradable market, but I don't trade it whatsoever. But I just have a gauge with the VIX, and just tells me when I can load the boat on some of these big day trades, all right? Because when the VIX starts to go up, the stock markets tend to go down, and when the VIX comes down, the stock markets tend to go up. Okay, so volatility increases as the stock markets come down. Do some homework, guys. Go and see how big the moves are to the downside on the indices compared to moves going up. Okay, the moves to the downside happen much quicker. Volatility increases as the indexes, stock markets drop. You see, put an average true range indicator on your chart, and you'll see the down moves are very much more in points than they are on the up moves. You use the average true range indicator. However, I want to stick to the VIX here. You can see a lot of people will look at the VIX and say, well, when it's flying higher, I should be short in the index. No, that's the wrong way. As the VIX is coming down, get ready to short the stock market, because as you know, what comes down must go up. So as it's coming down here, we're oversold in the green on the OBS. Momentum is slightly up. So I'm getting ready for that DAX. If it turns red, the volatility index will start to climb. And as it starts to climb, the markets will drop and we'll see more red. All right, so keep your eye out on the VIX. As it comes down, it goes up. Down, it goes up. Down, okay, it goes up. And as it comes down, the stock markets are going up. Okay, but as it comes down to a certain level, the stock markets then start to turn down and go back down. All right, so watch out on the VIX, guys. It's a cracking little index. It really does help me get ready for some of those big moves that are setting up. There is a big move setting up soon on the stock markets globally here. The European markets and the US and the European markets, of course, because the VIX is oversold in an impulsive move here. Okay, get ready. Oversold means stock markets are going to get ready for a down move. Now, that down move, what could it look like? I mean, as I said to you, the down move could happen absolutely any time with this huge divergence that we have got going on here. All right, but at the moment we haven't got the trigger. The trigger is the most important thing. If you don't get the trigger, and I'm sure you guys understand that, I bet a lot of you guys get the direction right, you get the swing trades, the day trades right, but you don't make money because it's the timing that's probably the most, well, not probably, but it is the most important. And we'll talk about scaling into trades, because I think at some point we need some education on that, because if you're going in with one trade, with one position size all the time, you've got to be really skillful to get that trade right. I think you should scale into some trades, just like I did on this DAX trade. This was a scale in and a scale out. Let's get it over. This is not one trade at £29 or 50 quid, the position size. This is multiple positions in here, not one trade. And I love to go for those big moves that are setting up, like we've seen in Bitcoin, gold, and the euro recently, and the yen pairs. Scale in, build your position if you've got enough margin. All right, so think about that. There's loads of education to come, guys. Make sure you subscribe to the channel, give it a like as well, because I've got so much more for you. All right, and any suggestions, let me know, and I'll certainly do some more education for you, because that's what we're all about here at Trading College. Make sure you like the channel and subscribe, guys. I'll speak to you soon.